Hey everyone, and welcome back to the show. Today, I'm so glad to have Hemal Badiani on the show. Hemal, thanks so much for being here. I can't wait to hear about your story.
Yeah, and I'm super excited to be here. Thank you for calling me here.
Awesome. So, everyone, Hemal is the founder and managing partner of Exponential Equity. Hemal started his real estate investing career in 2012 and founded Exponential Equity to focus on his passion of helping busy families achieve financial freedom through fantastic opportunities in commercial real estate investments. Hemal scaled his firm from zero to $100 million in assets under management in just 10 months. He's now focused on building a premier vertically integrated real estate company in the Southeast. Well, that is just an absolutely amazing story, Hemel. Why don't you take us back in time? And I know you started in 2020, which is just about a year ago. So, where were you at the beginning of 2020, and what are you up to? What have you been up to this year?
Yeah, at the beginning of 2020, I had a residential flipping business. I was a full-time corporate senior vice president at a bank, and I had done a couple of businesses before that. And prior to that, I had extensive management consulting career, worked with everyone from Disney theme parks to the Vatican. And so traveled to three continents, lived there every week on the flight, and learned from and helped a lot of Fortune 100 CEOs and CEOs. So I was at that junction where I had done some serial entrepreneurship. Was introspecting on what my right calling was. I had tested out that the fact is that with all the competency that I'd built with my career in management consulting, with my career in the financial world, with my background in family businesses, it was really the right time to find something that is not only a good business to scale, which I'd done multiple times, but something that's my true calling, right? And so I was struggling with that, whether residential real estate was that calling or not. And I hired a performance coach to help me with that struggle and conundrum. And the first call, the coach was like, "Yes, you need to shut your business down. This is not what you need to do."
Whoa.
And yeah, and
And what was their reasoning for that?
their thing was you didn't come all the way talking with Fortune 100 CEOs to be a senior vice president to now talking to, distressed landowners or house owners in terms of flipping houses. Even though it's profitable, it's very transactional. You obviously don't enjoy the conversation you're having. You need to have more sophisticated conversation. You need to build a team that is more competent than just hiring virtual assistant and doing cold calling and things like that. So it was a very transactional but highly profitable business that I was running. And so he was kind of reading back or putting a mirror to what I was thinking already. But he was like, if you need to take action, you cannot suffer with this conundrum for another 6 months. You just need to put a stop to it, and that would be my first advice as a coach to you. And so I took his advice and shut down my business. I had 10 employees. I let them go with a good severance package and everything else to sort them out. But yeah, I basically climbed down a mountain, didn't have any other mountain to climb. And this was pre-COVID, 2 months before COVID, right? So started looking around on what else in the real estate world. I liked the fact that real estate was tangible and real and all the lovely stuff that's why we invest in real estate, very predictable.
And Hemel, were you still corporate VP?
Yeah,
Okay.
yeah. I just quit my job on 5th May, earlier this month.
Wow,
Yeah.
congratulations.
Thank you. Now I'm full time into real estate. But yeah, so that's where I was. That's in February of 2020. I heard about this thing called multifamily syndication or
And where
syndication.
did you hear about syndications?
Oh, that just Facebook ads randomly popped up. One event in Florida, and I'm like, this sounds intriguing. It was highly discounted. If I bring another person with me, it was even a bigger discount. So I'm like, why the heck not, right? So I brought my partner, who's now my partner, Yomesh, the CEO of our firm. He and I aligned not only on the values and vision, but also had complementary competencies, right? He's more detailed oriented in terms of running and maximizing the operations, the legal aspects, the property management aspects, while I handle the vision and the strategy for the firm and the investor relations.
So
And so we
Hemel, just to pause for 1 second, will you explain what was, you came from a single family flipping business, I believe. So what was appealing about that? I mean, obviously, now we're full into this industry, so you and I understand this, but for the listeners who are maybe learning about this, what
yeah.
was appealing about that syndication ad?
The appeal was scale, the flexibility of passive income, and the fact that you had to do less number of transactions. So the value of your time and the value of the conversation you have and where you're focusing your energy, you can buy with one owner, one loan, 100 units or 500 unit apartment building. I would have to do the same thing 100 or 500 times in my single family business. So it was just, even though it was scalable, the single family side, and I had employees, the value of all those pieces of 100 pieces of financial statements, 100 loans, 100 closing statements, 100 different properties with 100 different problems to manage, versus one big community that you could serve, was just, the scale was just appealing.
Awesome.
Yeah.
Yeah, sorry, go ahead. And so you went to this conference in February 2020.
Yep. I went to this conference. I met a couple of emerging operators, a couple of mentors, and then one more event in March that kind of sealed the deal. That's real estate, commercial real estate of every kind, is starting with multifamily is the way to go. And obviously I'd broken my crystal ball in back in 2008, so I didn't know this little thing called COVID coming, like anybody else, right? So COVID hit, everything stopped. I had done these two events. I stayed in touch with a few of those operators that I'd spoken with, and got my first passive investment opportunity in April of 2020, just when everything was shutting down. And I put our $100,000. I wanted to put my money where my mouth was in terms of really building that diversified passive income, because I still had my corporate job back then. But also, in the corporate world, in the consulting world, you think about competitive intelligence, right? You want to learn from the best and institute some of the best practices by looking at multiple different peer institutions. So that's where the clock and my head started spinning. If I invest and diversify my investments passively into 3 to 4 investments, I get to see who's the best reporting expert. How is the communication done? What sort of transparency or lack thereof in this business is there? How can I build something in-house at some point that is, at least as good, if not better, than all these things that I'm seeing? So to that end, I ended up April through August, we ended up doing 3 more passive investments, which have provided generous returns, mailbox money, to my family, and I'm super helpful, grateful for that.
Even during COVID.
During COVID, yeah. And at the end of the day, regardless of what was happening macroeconomically, I knew that multifamily, longer term, it might obviously can have blips and in real estate like everything else, but as long as there's some level of cash flow, there's some level of appreciation. I could do the math. I didn't know all the underwriting models or anything of that sort, but I could do the math that in a 100 unit apartment, if it only takes 60 residents to pay their rents to pay my mortgage, I'm kind of okay. I might make more or less returns, but my money is safe, it's predictable, and it's longer term. That it's in addition to my 401k and stock and all the other stuff that one would usually look at in the corporate world.
Okay,
Yeah, so
great. So
that.
you started out as a LP, a passive investor, invested in 3 or 4 deals in spring, summer.
Mhm.
Then what?
That's when I was slowly building the team, right? So Yomesh and I were kind of putting things together, and my approach is three-pronged. One is invest passively in the asset class or competency that I want to build in. So put my own money, so test it out. Then enter a foot in the door with junior partnerships, 1 or 2, that'll allow us to be in more of the sausage making conversation. So 1st of September of 2020 was our first closing of a 208 units in Tulsa, Oklahoma. That was our first deal. We were the junior GPs or junior active partners, general partners in the deal. We brought in supplemental capital, but that allowed us to be in all the property management calls, all the due diligence calls, understanding of how the asset was procured, in being in seller conversations, et cetera, et cetera. So it allowed us to really build the next level of competency, find the right people that could join our firm and really build a team of A players that we can build a vision together of a multi-billion dollar global entity in the real estate space. So that's kind of, we started on that. And over the 100 days, last 100 days of 2020, we did two more transactions after Tulsa, one in Lafayette, Louisiana, and one in Illinois, and we went from 0 to 400 units in the last 100 days of 2020. In each transaction, we started taking more and more responsibilities to eventually be the active sole sponsors or lead sponsors of the deal, where we are finding the opportunity, we are actually executing the business plan, and working through and selling the asset eventually, or refinancing, or the entire life cycle is controlled by us. So that's how we built that one division of multifamily in 2020. And 2021 came along, we started recognizing that, with the stimulus checks, with the overall free money, capital events being had around some of the stimulus plans, also a lot of non-core assets getting less attention in the market, right? Office, retail, a lot of institutional buyers wanted to jump in multifamily. Multifamily started becoming very competitive, right? Because again, it's a safe asset, even relatively. In recession times, you still need food and housing, and housing in an apartment in good tailwind type of markets like North Carolina, South Carolina, Texas, Oklahoma. Those are good markets to where people are moving. So just the supply demand, the macroeconomics supported what we were trying to do, and so we started building a team. Now we have a team of 6. We have acquisitions team members full time. We're hiring virtual assistants to do more 24/7 underwriting, so we can send them raw data in the evening, and next morning we come in and we can have our data cleansed, and we can allow us to look at opportunities faster in this market. And we're now expanding into new development as well, which is an exciting phase or new division of the business that we're liking very much. Again, from a overall macroeconomic standpoint, makes sense.
That's awesome. So tell us about your new development project.
Yeah, so we have 2 new development projects underway right now, and both of them we are very patient, right? So we buy local land in North Carolina. We go through, work with the city to understand what the highest and best use of that land is. We rezone the land from residential or agricultural to commercial pieces of land with the architects and rezoning attorneys, and we wait very patiently 6-8 months. So the 2 projects we have 30 townhomes, very high-end townhomes that we're building about 10 minutes to downtown Charlotte, which is very appealing area. So we'll be starting that project in the next month or two. And then we have 400 plus self-storage units that will be ground up construction in the north part of Charlotte. So those are the 2 projects. We also in the acquisition mode for another 150 acres in the North Carolina market, and really look to 3 to 5 more transactions in the new development space in the Carolinas.
Well, that is really incredible, Hemal. I wonder if you can shed some light for the listeners on how you were able to just build so much last year. What laid the foundation for that, and what do you attribute your success so far to?
Yeah, it's an experience, right? I attribute introspection and experience were the 2 things, right? I really, in the corporate world, if you think about, they do a lot of assessments, right? And it gets cliched, but you have the Strength Finder assessment from Clifton, or PI index or disc profiles, etc. It's really meant to know yourself, right? What season you are of life, what do you really like doing? So I've been in the business of building businesses for the last 20 years, my own set of businesses, and businesses for other Fortune 100 companies. Worked with a really smart set of people. So that was what I wanted to bring, is really a culture of people first, profits come close second. But how do we be a better customer service oriented organization? I really didn't want to. I'd done the transactional stuff. I didn't want to do the 2 transactions a year where I buy some property, maximize the profit, and then sit on a beach in Hawaii. There's nothing wrong with that. But that wasn't what my vision was. So really clarity of vision, the experience that we had, and aligning people to vision, right? You have to build your tribe by not appealing to everyone else. You have to really talk about what's really clear in your mind. What are you trying to do? And people get attracted to that. I have my head of acquisitions, for example. You'll be amazed at this story. He moved with his entire family, and the first 6 months, I didn't pay him a dime. He moved his entire family from Raleigh, North Carolina, to Charlotte, North Carolina, to be closer to the firm, and because he was aligned to the vision on not the outcome of what he had seen already, but the fact that we are building something the right way, with the right foundations, right infrastructure, in a manner that it could be a corporate organization, a big corporate organization in the future.
And do you attribute your vision of building that strong foundation to your years in management consulting?
Yep, absolutely. Yeah, I quickly realized, right? If you own 1% of $1 billion company, or 100% of a $10 million company, it's the same net worth. So it wasn't about net worth. But running a $10 million company versus running $1 billion company comes with a different set of expertise, right? The training associated, the sometimes the bureaucracy, the levels of management, the auditing, the accountability aspects of just a handful of employees versus a few hundred or few thousand employees, it's completely different. And I grew up in that culture even as a 22-year-old. When I started in the management consulting space, I was giving advice to CEOs and CEOs who've been in the business for 20 years, on how to make tweaks to their organization. So I always worked in that Fortune 100 organization, and my vision was not to build that $10 million company, but build something that could be, very large in scale. It didn't matter how much of that I owned personally. It's all about how big and how efficient and how valuable I can make the company in all aspects, from an impact standpoint, from a profitability standpoint, from a customer's standpoint. And that's where I'm like, why not, right? Why stop at 5 employees? Why not build 500, 5,000 employees organization?
Wow, that's definitely quite a vision. It's very impressive for sure. I um, I want to take a peek and see what it is that you think attracted you to building this particular business, as opposed to, I mean, you've had exposure to so many different types of businesses over your management consulting career. What was it about multifamily and syndication real estate that attracted you?
Yeah, I've had the good fortune personally to build an outsourcing business, which I sold, a private lending firm I sold, the residential business I sold, and all of them were profitable. All of them were scalable. Multifamily to me is more about people, and commercial real estate is more about people, and real estate in general, than any of those businesses, right? You can make money by buying Bitcoin nowadays, right? Or altcoins nowadays. So money can be made 20 different ways, but the impact, if you buy a community and you're able to change or tweak the lives of the families of the kids who are living there. We just bought an asset where we have a community center where we provide free computer labs, free after school programs to the children who live there and the families who live there. That type of impact is intangible, That type of impact leaves a legacy, and really is the right thing to do, right? Why not give back? There's only so much you can earn, but businesses should be looking at one stream of thought around giving back. And real estate, whether you give back in terms of uh, share of your profits or serve your communities, or even if you buy land, which I personally want to do, is, for climate change, just keep buy green land and keep it. There's so much you can do to millions and millions of folks getting impacted in the real estate business than, in my belief, other businesses that I've built or helped build. And that's why I love this aspect of business, especially multifamily.
Wow, there's so much there. I want to just touch on one piece that you mentioned, which was this piece of um, this computer lab that you built. Can you tell us a little bit about the property and how you
Yeah.
chose to do that, how it fit into the budget?
Yeah, it's a 246 units in a low income housing tax credit type of community in Winston-Salem, North Carolina. We just closed on that transaction in April of 2021, and there's just a very active community center there. So we have a community garden there. The people are incentivized to get more fresh food that they can grow in the community garden. The computer lab, some of it's there. We are expanding on it. And we partnered up with organizations like Hope and YMCA to bring after school programs for free, a volunteer kitchen, trucks come in. It's more than just a normal set of activities that you would see in a community. And the reason is we want to build something that's a model community. It's more than rents and other things. We want to show the city of Winston-Salem and all the other cities that we go through that we truly want to care for these residents, and whoever lives there, if they're good residents, they're long-term residents, we want to keep them there. And many of the residents there have been, even before we bought that, the trend has continued from the previous seller. They've been living there on an average for 10 years, which is unbelievable. So we want to keep that community and safety oriented aspect alive.
Very interesting. And I'm just curious from a business perspective. So this is a low income housing tax credit property, and assuming the rents are still restricted. Is that correct? And for how much longer are they going to be restricted? And what's your plan for the end of that period?
Oh, that the business aspect is completely different, right? So the cap, Winston Salem as a market is one of the hottest markets. It came number six by Yardi Matrix in terms of rent increases in 2021, before Dallas, before Charlotte, before Raleigh. It's growing by 5% a year in terms of rent growth or rent increase. And this seller, since they bought this property, hadn't increased the rents in the last 6 years at all in this property. And we got a heavy discount because the seller couldn't close on a contract earlier. And so we got a $600,000 discount on the deal. So combine that, the cap of where the low income rents are is $400 more than where the current rents are. So we have a lot of room. We're actually increasing rents by $100 for all new leases right now on an average immediately. And so we have a lot of room. Plus, we're doing a lot of creative long-term contracts, security, insurance, and other aspects that allow us to have more quality tenants. But again, once they arrive there, the point is, they're still paying lower than market rents, even at that $100 rent increase. But more importantly, they're getting all these aspects of daycare and computer labs, healthy living, healthy eating, that even if they were paying $100 more in some other communities, they would not be getting, right? So we want to have that stickiness of good quality tenants in there, and bring them slowly to market rents, because we're running a business obviously, and we have a fiduciary responsibility to our investors. The plan is to keep it for 8 years. We invest, refinance in 3 years, get 100% of investor cash out, and keep it for another 5 years. And closer to that 8, 9 year mark is when we'll sell it, which is when the rent caps go away. And so the new buyer of the asset will have multiple strategies to make it a market ready or market rent type of property. But it's a unicorn of an asset that we're excited we were able to get at such a ridiculously low price and able to execute on the business plan in the first couple of months already.
Yeah. Well, that is very awesome. It's great that the families that are living there are going to have so many more amenities and opportunities for their kids, et cetera. So wonderful. Well, I know I could keep talking with you for quite a long time, Hemel, but we'll save it for the next podcast. Thank you so much
Absolutely.
for coming on. Before we go, give the listeners an idea of how they can get a hold of you and anything else you'd like to share.
Yeah, absolutely. I would love to speak to any of your listeners who are looking into commercial real estate, whether it's passive or active. In general, our company name is Exponential Equity. The website is www.exponential-equity.com. And my email address is hemal, Hemal, at exponential-equity.com. I look forward to staying connected. And thank you once again for bringing me on this show, and I look forward to listening more of your episodes.
Awesome. Thanks so much, Hemel. We'll see you next time.
See you next time.